Hey everyone, Ryan Meeks here with the Escape to Arizona YouTube channel. If this is your first time to this channel, I provide a lot of information for buyers and sellers, and I specialize in relocation. So with buyers that are looking to relocate to the Southeast Valley, East Valley in general. I also make it out to the West Side on occasion. So if you are looking like Verrado, Surprise, Sterling Grove, places like that, I can definitely help you out there as well. And in this video, we're gonna do a market update. I'm gonna start doing these every week. I know today's Wednesday, but I'm thinking we're gonna put them out on Monday and just kind of give you an idea, because I do have buyers coming out here, and I'm super grateful that people have been using me, and I just want to provide a little bit more information on how the market is when they get out here, when you get out here. So that's kind of my goal with these market update videos. Let me know in the comments down below what you think of the video and if it's providing some valuable information for you. So, and with that, I just want to say I'm very excited. I just got a VA buyer under contract, so I'm going to ring this bell. It's really loud, but I'm super excited about that. I think we put in about 8 offers, and that's kind of normal in this market. And one of the issues as a VA buyer, and if you're getting a VA loan, is that even if you waive the appraisal, you go over appraised value, at the end of the day, there's always the escape clause for a VA buyer, which lets them get out of the contract pretty much scot-free if they cancel due to an appraisal issue, or pretty much anything. So, and at the end of the day, it's going to be the appraisal issue, which is on the escape clause. So there's just a clause at the end of the transaction, and really disappointing that no realtors, or no even sellers would take a chance on this VA buyer. I felt really bad, and it was a referral from another person coming from Illinois, but they were solid buyers, and they really needed to get here and get a home under contract, because the wife, the mother, is starting work in June. And I mean, they just needed a house under contract. So I'm really excited that they were able to get in the home. But it was a battle, and they were ready to quit, and I'm glad they didn't. And I was never ready to throw in the towel or anything, but it definitely was a challenge. So just keep that in mind if you're a VA buyer. Feel free to call me up and ask me about the experience. I'm happy to share it with you a little more in detail. So with that being said, we're going to get into the market update, and it's starting now.
It's time for another market update featuring Ryan Meeks.
So hey everyone, Ryan Meeks here. This is your market update, and it's kind of a February aggregate update. And like I said before, I don't really do updates. So if it's your first time to my channel, it's my very first market update. And I hope you like that intro. It took me like 27 seconds to get that done. So bear with me. Let me know your thoughts once again in the comments below. I'll try to keep it entertaining with some fun B-roll. Maybe I'll throw in some clips from, I don't know, Chris Farley.
Help! There's a cliff!
Maybe some other weird stuff. We'll see. Here's some, just interesting data, talking points from February of 2021. So February of 2021 did report the highest median average price per square foot on record, whatever you want to call it, year over year. And 18.6, 22.3, 21% were the numbers respectively. So let's just call it about a 20% return. And that means if you bought a home last year, $400,000, and did some simple improvements, maybe painted it, or, you put up some nice lights, whatever, you could easily sell this home for $480,000. And that's more than people's salary. I mean, come on. And I've seen homes purchased back in September of 2020 for $550,000 and sell for $200,000 more with just a fresh coat of paint and some carpet replaced. So it's bananas out here. So in terms of rents, it's gone from $1 per square foot on average in the valley, in the entire Phoenix metro area, up to about $1.22 per square foot. So pretty much on pace with the increases in pricing. So about a 20% increase. And if you think about it, if you're not locked into a home, you're paying 20% more to rent, and you're not making that 20% in equity. that you would have made if you had purchased last year. So that's rough, and I feel bad for a few clients of mine that waited to purchase. I had one client that put one offer in, didn't want to have a bidding war, and now they're pretty much priced out of the market. So I feel so bad. Really just get in there and purchase as soon as possible. So I really don't believe prices are going down. There's still just a ton of demand out there. Once interest rates rise a little bit, I feel like it's gonna definitely keep some buyers from purchasing, but hopefully decrease their purchasing power. So for the buyers out there, 44% of the sales in the Valley have closed over list price in the last 30 days in February, as of March 6 to Feb 6. And the amount over asking ranges anywhere, but it's on average about $10,000 with a range between $1 all the way up to $310,000 over list price. Yes, and if you're thinking why a dollar, think price is right. That's kind of the strategy that I've been implementing with my buyers. Is like, hey, just go a little bit higher. And so at 44% that are going over, it means 56% of those are still selling under list price. So you have a budget between $250,000 all the way up to $400,000. The percentage selling over list is highest at 52%, with the median amount over list at $10,000. And if your budget is over $400,000 up to $800,000, 42% have sold over list, with a median kind of area between $12,000 and $15,000. And from $800,000 to $1 million, 30% of these listings have sold over list price, and you're looking at about a $17,000 to $20,000 over list value with those. And going up from $1 million to $2.5 million, 20% of those sold over anywhere from $30,000 to $50,000. And over $2.5 million, only 2 houses sold over asking price, and that average was $150,000. So I hope you followed all that. Basically, stuff is selling for over ask. Now, over the past 6 weeks, we've added an average of 2,000 new listings per week to the MLS, and during that same period of time, 2,300 contracts were accepted per week. And this is really what caused the overall supply of homes to consistently drop pretty much month over month. That's obviously what's happening. And the competition between buyers is obviously going up as well, which is then causing prices to increase. So while just over 2,000 new listings per week may seem like a lot, it's actually the lowest rate for this time of year in the past 20 years. So that's kind of crazy. So for sellers, I got some info for the sellers out there. Possibly you. If you're looking to sell, call me. While supply is still 77% below normal for this time of the year and demand is 17% above normal, demand's actually been dropping faster than supply over the last 30 days. So that may give some balance to the market here, or a little less balance to the seller side. And it's not noticeable when you're in the midst of a contract negotiation, because the sellers really notice what they're getting. For example, 15 offers instead of 25, but last December it was 35% above normal. At this rate, demand could be at a normal level in a couple months and below normal by June. So that's what I'm really hoping for my buyers. And if you're looking to sell, now is a great time. So consider that. You'll get multiple offers right now, maybe not in June. So this isn't going to cause prices to decline, because there's still a very low number of competing listings in the MLS. But hey, it could mean that like the second half of 2021 could look very, very different from the first half of 2021. And especially if there's a boost in new listings after this forbearance period ends, and after the foreclosure moratorium's lifted, because right now that's still going on. So looking forward to that, hoping I can get my buyers in to some homes, and there'll be a little more inventory, right? And the average mortgage rate rose to 3.02% this month, according to Freddie Mac. Even though it's still considered an awesome rate, it still weakens the purchasing power for some buyers. It reduces the affordability measure for Greater Phoenix overall, and just makes homes become a little more unaffordable. So when a family making the median income can afford less than 60% of what's selling, demand is typically expected to suffer. However, when you have buyers that are making median incomes coming from Los Angeles, San Francisco, that are usually only used to affording 9 to 11% of what's selling in their towns, it definitely keeps demand a little bit higher. So these Phoenix prices look amazing in comparison. And the idea of just even being able to own a home is also amazing. So that's gonna, as long as we have people still coming from California, Washington, Oregon, all these other states where it's a little less affordable, it's gonna continue to drive up demand here. Hey, thanks for watching. For more videos on escaping to Arizona, just click that subscribe button to stay in the loop.